Joining me now is Carley Garner, senior strategist and broker at DeCarley Trading. Carley, great to have you back.
Thank you. It's good to be here.
So Carley, you've been a gold skeptic for quite some time, yet it just touched a new record high yesterday. It's a bit lower today, back right around 3,600 an ounce, but still close to those highs. You say this is the last hurrah. Tell us why.
Yes, I'm aware of the fact that I've been bearish for a little while and gold has refused to sell off. In fact, we've made just recently in the last couple of days, we've made new all-time highs. But I don't think that my premise is wrong. I think we're just, uh, you know, since the pandemic, we've had so much stimulus come into the marketplace that all assets are going up. It's not just gold, stocks, real estate, you name it. A lot of assets are benefiting from just simply the fact that there's a lot of liquidity in the system chasing a handful of assets. And I think that's probably part of what's going on in gold. It's also being exacerbated by some really odd things that we haven't seen before. For example, AI. I just read an article this morning about AI bots that are basically programmed to trigger buys in gold when the headlines start churning. And it's ironic because it's kind of a nasty cycle. Like the AI bots are creating articles that are bullish gold, and then those bullish articles are triggering buys in the market. This has existed for years. This isn't something new, but it's a lot more mainstream now than it used to be. It used to be, a handful of really smart tech programmers could do things like this, but now in today's new environment, almost anybody can write an algo or write a system that reacts to headlines. And I think that's a lot of what's going on. So I would argue that yes, gold's going up, but I think it's going up in spite of fundamentals, not because of fundamentals. So maybe we see 3,700, maybe we get some sort of additional parabolic run higher, but I stand with my idea that this is probably gold's last hurrah. And at some point, probably the next couple of years, as popular as gold is now, it's going to be as just as unpopular. It was only 2022, 2023, when nobody wanted to touch gold. It was considered kryptonite in a portfolio. It didn't pay dividends or interest. It was a price dog. It hadn't gone anywhere in a decade. And we will see that again. This is the type of market that gold is. We have to give it a little more time, and I think we'll start to see some uh, surprising price action on the chart.
Okay, so you said 3,700 is a possibility, which would mean the peak
It's
isn't in just yet. Yesterday wasn't necessarily the last hurrah, but I guess what signs should traders look for that it is coming to an end other than an all-out reversal?
right. Well, that's the thing is when markets reverse, it's kind of, it happens all at once. There's no memo. And I believe this is my opinion. I talk to a lot of retail traders, and I believe there's a lot of complacency out there. And so, if and when it turns, as I do believe it will, and just, let's keep in mind, I'm an analyst. I don't have a crystal ball. I can't see the future. I'm just going off of what I've seen gold do historically. In the 79-80 rally, and then again in the 2011 rally, we had exactly this type of parabolic price action. And then when the party ended, it ended very sharply. I will say this: gold is. A lot of people are talking about gold as a safe haven. Gold is a safe haven at times, but in other times it's not. And I think this is a time where it is not a safe haven. In fact, if you look at the charts of gold, Bitcoin, and the stock market from basically 2020, right before we got all the stimulus coming in for COVID, the pandemic, those three assets, gold, stocks, and Bitcoin, have basically moved as if they're one asset. Gold is behaving like a risk asset, not a risk off asset. So if there ever is any trouble in paradise in risk assets, we could easily see gold follow suit. So just be very aware of that. If you're buying gold because you think it's a safe haven play, think again, it's behaving like a risk asset.
So how much does it have to fall to be at a price that makes sense to you?
I'm going to throw some kind of shocking numbers out there, but gold is not the kind of market that corrects 5 or 10%. When gold goes into correction, it's 45, 50%. In the 80s, we saw a 70% plus correction. Gold is a very boom or bust commodity. If you look at gold, let's just take since 2011 through today, gold has gone up on average 6% a year. but almost all of those gains have occurred in about 3 years out of the last 15. So if you take away the really big dramatic gains like we've seen the last couple of years in gold, it actually hasn't performed all that great. So it's a market that has to be timed well, unless your holding period is multiple decades, not years or months.
Okay, so we could see a really huge downturn with 40, 50% possibly.
Yep.
What about this huge move higher that we've seen in silver? Is there still money to make in silver, or too late to that party as well?
Yeah, thank you for asking that. Let me just mention one more thing I should have mentioned previously. If gold behaves the way that it has in the past, we could easily see 2000 again in gold. I know that sounds almost impossible to most people, but that's how gold behaves. And that would be basically taking back this entire rally and starting from scratch where it broke out. Believe it or not, I think that is not just possible, but probable. And going to silver, silver has been kind of leading gold here in this last week or so on the last leg of the rally. Had silver not broken out, I think gold maybe would have struggled a little more than what we've seen. But that said, silver has the capacity to go head into the 44, 45 area. The all-time high in silver is $50. Um, I can't rule out, maybe we do see $50. I've actually, in my, not recently, but in previous years, I've actually mentioned I don't think silver is going to see $50 again in my lifetime. And maybe I'll be proven wrong here in the next few months, but I'm not sure that I will be. Silver is an industrial metal. So it does have a lot of production use, unlike gold, which is mostly just a precious metal and jewelry. Has some might capacity to be a useful commodity, but not at these prices. So I think once we get up into the 40s, it takes a lot of that industrial use away, and we're left with a precious metal that this has been my experience. I know people are going to think I'm crazy, but the reason we're talking about silver is because it's at the highest level it's been since 2011. But what that means to me is this has been a complete dog since 2011. Like if you bought at the highs in 2011, you're just now maybe getting your money back, and you might even not, you may not even be up to par. So again, it's getting a lot of attention now, but if we're talking about an asset that most people should have in their portfolio, I don't believe it's that.
So if you had to buy one, gold or silver, right now, which would it be?
If I had to buy, ooh, that's hard. I'd have to really, it could very well go up, but if I had to buy, and that would be a tough pull the trigger for me, I'd probably pick silver. I think silver might have a little further to go on the upside because it's just now getting into the spotlight, where gold is maybe a little bit saturated in the spotlight and everybody's already long. Might just run out of buyers in gold, but silver might have a little ammo left.
Okay, and finally, Carley, you make a good point. We've seen gold move up along with the overall stock market, along with Bitcoin. What if we see a reversal in the stock market and the second half of the year doesn't look as good as some of the first half did? Obviously, we started kind of on a downbeat note there. Do you think that there's potential for that money to actually then go into gold, and for gold to be a safe haven in that case then? Or silver?
That's an amazing question. Thank you. I'm glad that you brought that up, because I've been thinking about this. I'll point out that I've noticed that Bitcoin generally tops before the stock market does. Bitcoin in February, March timeframe topped about a month before the stock market actually did. I think it was late March Bitcoin. Actually, I take it back. Maybe late February, early March Bitcoin topped, and then the stock market came in early April. We're seeing something similar. Bitcoin seems to have started to decline here in the last handful of weeks, and I think the stock market has a pretty good chance at following suit. Now, these have been like just bombastic bull markets. It's hard to pick a top, obviously, but I will say that the risk is probably to the downside in both of those assets. And if we do get some sort of market surprise or seasonal sell-off like a lot of people are looking for, I do believe it pulls gold lower. I don't think we're going to get people hitting the buy button on gold because as I mentioned, they're actually trading as if they're one asset. Gold in the stock market over the last handful of months have been correlated positively about 50% of the time. That's not an extreme positive correlation, but it's enough to let me know that if something goes south in the stock market and or Bitcoin, which would probably be both, they're going to probably hit the sell button in gold also to raise liquidity. And I think they're all going to go up, whether they go up or down. They're all going to probably move together. So don't try to buy gold if the stock market gets a little bit rocky. I think that might be a bad move.
Okay, we'll leave it there. Carley Garner, Senior Strategist Broker at DeCarley Trading. Always appreciate your insights. Thank you.
Thank you.